On July 28, 2026, a company most people have never heard of became the most valuable stock listing in Hong Kong this year. The IPO raised $6.81 billion. The company is called Zhongji Inolite, and it may be China's most dangerous weapon in the global semiconductor war. Not a missile, not a trade tariff, a chip, a specialized chip that sits inside data centers, quietly routing the massive data flows that power AI. Without this chip, the world's most powerful AI models cannot function. NVIDIA dominates this market. Its InfiniBand and Ethernet switch chips control over 70% of global AI data center interconnects. But Zhongji Inolite just raised more money than any other company on Earth this year to change that. This is the story of how a Chinese optical component maker became the $6.8 billion challenger to the most powerful semiconductor empire in history, and why the United States government is watching this IPO with alarm. Zhongji Inolite does not make the processors that train AI models. It does not make the memory chips that store data. It does not make the GPUs that NVIDIA is famous for. It makes something more fundamental: the connections. Inside every massive AI data center, thousands of processors must communicate with each other at speeds measured in terabits per second. The cables, the switches, the optical modules that convert electrical signals into light and back again. These are the nervous system of artificial intelligence. Without them, the brain cannot think. Zhongji Inolite is the world's largest manufacturer of these optical interconnects. Its products sit inside data centers run by Google, Amazon, Microsoft, and Meta. Its technology enables the large language models that power ChatGPT, Claude, and every major AI system on Earth. The company was founded in 2008 in Suzhou, China, as a small optical component supplier. For years, it operated in obscurity, selling transceivers and fiber optic modules to telecommunications companies. Then, artificial intelligence exploded. The training of large AI models requires massive parallel computing, thousands of GPUs working in unison, exchanging data constantly. Traditional copper connections cannot handle the bandwidth. Optical interconnects became essential. Zhongji Inolite's revenue grew from $400 million in 2020 to over $3 billion in 2025. Its market capitalization, even before the IPO, exceeded $20 billion, and its customers were not Chinese companies. They were American. Google's tensor processing units use Zhongji Inolite optical modules. Amazon's Trainium chips connect through its technology. Microsoft's Azure data centers rely on its transceivers. The Chinese company had embedded itself inside the American AI infrastructure. This is why the IPO is dangerous. The United States has spent the last 5 years trying to decouple its semiconductor supply chain from China. Export controls block NVIDIA from selling its most advanced chips to Chinese companies. Tariffs make Chinese semiconductors more expensive. The CHIPS Act pours $52 billion into American chip manufacturing. But Zhongji Inolite exposes a fatal flaw in this strategy. America can ban the sale of advanced chips to China. It cannot easily replace the Chinese companies that already supply critical components to American data centers. Zhongji Inolite's technology is not easily replicated. Its manufacturing scale, built over 15 years, would take a decade and billions of dollars to reproduce in the United States or allied countries. And now, with $6.8 billion in fresh capital from its Hong Kong IPO, the company has the resources to expand its dominance. The IPO itself was a statement. Hong Kong, not New York. Chinese investors, not American ones. A listing that deliberately avoided the scrutiny and regulatory oversight of American markets. The message was clear. Zhongji Inolite does not need Wall Street. It has the Chinese government behind it, the domestic capital markets to fund it, and the global AI boom to drive demand for its products indefinitely. The $6.8 billion will fund new factories in Suzhou and Wuhan. It will finance research into next-generation optical interconnects capable of handling the exascale data flows that future AI models will require. It will acquire smaller competitors and consolidate the optical component market under Chinese control. And it will do all of this while American companies remain dependent on its technology. The United States government has noticed. In March 2026, the Department of Commerce added several Chinese optical component manufacturers to its entity list, restricting their access to American technology. But Zhongji Inolite was not on the list. The reason is simple. Sanctioning Zhongji Inolite would disrupt the American AI data centers that depend on its products. Google, Amazon, and Microsoft would face immediate supply shortages. Their AI training pipelines would slow. Their competitive advantage against Chinese AI companies would erode. The American empire has built a fortress around its most advanced chips, but it forgot to check who made the doors. This is the paradox of the semiconductor war. America controls the most advanced chip designs. Taiwan controls the most advanced manufacturing. But China controls critical components that neither can easily replace. Zhongji Inolite is the proof that decoupling is not possible, that global supply chains are too intertwined to unwind, that the empire that tries to build walls will find its own foundations resting on the other side. The initial public offering also signals something else. China is not trying to match NVIDIA processor for processor. It is trying to dominate the infrastructure that surrounds the processors, the optical modules, the power systems, the cooling technologies, the components that are less glamorous than GPUs, but equally essential. This is asymmetric warfare. While America pours billions into advanced logic chips, China is building dominance in the ecosystem around them. The strategy is not to win the GPU race. It is to make the GPU race irrelevant by controlling everything else. Zhongji Inolite's $6.8 billion war chest is the opening salvo. The company has already announced partnerships with Chinese AI chip designers, including Huawei's Ascend division and Biren Technology. These domestic processors, while less advanced than NVIDIA's, will be paired with Zhongji Inolite's interconnects to build all Chinese AI data centers. The goal is not to sell to America. The goal is to make America unnecessary. China's AI infrastructure will run on Chinese chips, Chinese memory, Chinese optical modules, and Chinese software. The $6.8 billion ensures that this infrastructure will be built at a scale that rivals anything in the United States. And American companies? They will face a choice. Continue buying from Zhongji Inolite and fund the Chinese AI ecosystem, or attempt to replace its products and accept years of disruption and higher costs. Either way, the Chinese company wins. The market understood this immediately. Zhongji Inolite's stock surged 23% on its first day of trading. The Hong Kong exchange saw its busiest trading session of the year. Chinese state media celebrated the listing as a victory in the technology war against the West. Analysts raised revenue estimates. Competitors' stocks fell. And NVIDIA, the empire that Zhongji Inolite is challenging, saw its shares dip as investors realized that dominance in AI chips does not mean dominance in AI infrastructure. The $6.8 billion IPO was not just a fundraising event. It was a declaration of empire. But empires built on public markets carry their own risks. Zhongji Inolite's valuation, at over $30 billion, assumes continued explosive growth in AI data center spending. It assumes that American companies will keep buying its products despite geopolitical tensions. It assumes that China will not impose export restrictions of its own. Any of these assumptions could prove wrong. If the United States finally sanctions Zhongji Inolite, the company would lose its largest customers overnight. If the AI boom slows, data center spending would contract. If Chinese AI chip designers fail to match Western performance, the domestic market would not absorb Zhongji Inolite's expanded production. The $6.8 billion is both a weapon and a wager. A bet that China can build a parallel AI infrastructure empire faster than America can replace the components it currently depends on. Today, Zhongji Inolite trades on the Hong Kong exchange as the most valuable technology listing of 2026. Its optical modules sit inside data centers from Silicon Valley to Singapore. It's $6.8 billion war chest funds factories that will produce the connections powering the next generation of artificial intelligence. And its very existence exposes the limits of American semiconductor strategy. You can control the processors. You can control the manufacturing. You can pour hundreds of billions into domestic chip production. But if you forget who makes the connections, the empire you are building may rest on foundations you do not control. The semiconductor war is not won by the company with the fastest chip. It is won by the empire that controls the entire system. And with $6.8 billion and the full backing of the Chinese state, Zhongji Inolite has just announced its intention to build that empire. Subscribe to Empire Uncovered for more stories of the rise, dominance, and collapse of corporate empires. Because in the chip wars, the most dangerous weapon is not the processor. It is the connection that makes the processor work.